Hi and welcome to Pleasant Trading. My name is Robinson. Today we will be looking at just a few charts. We got a lot of things that have made new highs. If you're still trading, if you're still paying attention, there's a lot of things that have made new highs and have started to come down off of their highs. And I think it would be just really relevant to make a video right now to explain kind of what I think is happening in the market. After something has made a new high, it generally will pull back a little bit to try to find this stability to see if it wants to go again or just kind of trade sideways and then finally fail. But we have a lot of different markets right now. You have forex, you have futures, you have stocks. A lot of things have went in a lot of different ways. So today I want to just look at a few different stocks and symbols and just see what's been happening lately. So this first chart we have here, if you look at Google, when it was back here at 562.09 and it breaks the 200, it breaks the 200, comes up here for its first leg, comes down, and then this small itty bitty candle holds right above the 200, and after that it just never comes back, right? So it does the second leg up, and then you get another pullback. It should have come further into the 200. It doesn't. This green candle completely erases the red candle in front of it, and then we do our third leg up. So now it's over. We've made a new high at 920.60, and it's starting to come off of its high. And notice that it's made a low and then a higher low, right? Given if this holds, because it can still very much on this side here come down and do a double bottom, and then whatever, we'll see. But it's trading higher and higher above the 200 if you're noticing. And this can trade sideways for a while, like I said, because it has just made a new high. It's come down here, it held on the downside, but on the upside you kind of have this red doji here. So you have a high here and then you have a lower high. It doesn't mean that it's going to naturally turn around and just start going down, but it could mean that you're in for some kind of consolidation and the market trading sideways for a little while. So definitely something to consider, something to think about. Okay, next chart we'll move on to is Apple. So here on Apple has gone up to 705.07, broke the 200, like I said, came back up, and here goes our red little doji thing again. Tries to get above the 200, can't make it, drops again, tries to make it again and can't do it. So you have a high and a lower high, and it just continues, a lower high. And it's here you kind of get into a double top a little bit, because you had this green candle erase this one red candle right in front of it, so it kind of pulls back here a little bit, and then finally it comes down and makes a brand new low here. So one of the things, like I said before, after something has made a new high, it's come all the way down and made a new low, don't be surprised if this wants to trade sideways for a little while. Now there may be fundamental news driving Apple, so Apple may be the exception to the rule. There may be fundamental news driving the stock and still sends it way lower, or one day it'll just gap up higher and higher and higher because some problem that they got fixed, or just whatever. So like I said, after something's made a new high, and especially this has made a new high and a new low, expect it to trade sideways for a while, and try to avoid those things that are trading sideways. And if you do have to trade them on a 15-minute, trade them on a 5-minute. Try to avoid trading them long term just because you're in for a good sideways movement. Now maybe if you're an options trader and you can do all kinds of cool strangles and straddles, that may be a place to implement it, because it's trading sideways for a while and it may break out to either side. Right, so next symbol we have is the S&P 500. We got this low down here at 1316. The market starts to trade higher, comes into the 200, it holds, it comes all the way down, breaks the 200, it holds again, comes back to the 200, holds again. I don't know if you guys can see this so far, but the 200 is very, very important, and that's this big long green line that I have on all of my charts. It's the 200-day moving average, and it's very, very strong. Whenever the market comes into it, especially like on a bigger time frame on the daily, it can really, affect the market and hold it up, or if it breaks below it and can't get above it, like the example we've seen in Apple, it could really tell you that this trend is starting to change whenever it comes close to the 200. So anyway, the ES kind of trades higher and higher and higher here. We get a new high, like I said before, and this high here is at 1685.75. So you get a high here, your small pullback, And even the pullback, if you're just gauging this pullback here, it kind of went down and then it went traded sideways for a while, like it was trying to figure out what it wanted to do first before it dropped, right? Like it looked like it wanted to go up, and then finally it drops and then pulls back and then drops again. Now this right here looks kind of like a bear flag, so this could probably continue lower, but we'll just have to see. And like I said, folks, I am a day trader, so I trade the 15, the 5 minute, the 1 minute. I use the daily charts to kind of get a feel for where the overall market is going. Is this a strong uptrend, a strong downtrend? Is it going sideways on a bigger time frame? Because I need to know that as I'm trading on a 15, a 5, and a 1, because if it's a sideways trend or like this, you know, on Friday was probably a whole red, this is a whole red candle here, so on Friday we had a strong downtrend, right? And that lets you know that, hey, I probably shouldn't be going long today as much just because the candle for the day is red, you know. And stocks, that's a little bit harder to do because the market doesn't open until 9:30, so I probably won't start considering the stock daily candle till about 10, 11 o'clock after it's had a chance to make some movements. Hopefully you've had, you know, support and resistance lines up too, and you can see for yourself where the strength and weakness is in whatever symbol you're trading. Gold is another one, so we made a high here at 1798. Gold broke here, broke the 200 again, like I said, and then you get this one leg down, pull back, you get this huge leg down here, pull back, you get another leg down, pull back, and then finally it makes a new low down here. So gold may be over. The short selling may be over in gold. Not 100% sure. We'll have to see as Sunday opens up. As Sunday opens up, the market could trade. It could gap up higher and higher and come all the way back, you know, to 1340 here at this red line. And like I said, I don't predict. I try to anticipate. So all of these things that I'm saying here now are not to be used, but you kind of want to gauge and see for yourself that, okay, well, if we made this whole new high here, we've got a new low there, there's a very good chance that gold could start trading sideways. And if I'm going to just now take a long-term trade in gold, it probably wouldn't be a good idea. If you're gonna, you know, get in there and scalp and trade on the 15, the 5, and the 1, you got to be very, very careful because, you know, it's kind of trading sideways, which could mean a V bottom or a V top throughout the day when you're trading on a smaller time frame. So just some things to watch as you're trading these markets. Be very, very careful. You know, the market still hasn't completely figured out what it wants to do yet. I guess we'll figure out a lot more come September. But for now, you know, keep the powder dry, trade lightly, and be careful. Thank you.